What is synergy as it pertains to business strategy? Well, synergy in itself is when you have the combination of two forces that creates more value by virtue of its combination than would otherwise be the sum of its value individually. So when you bring two things together, more value is created than the combination of what those two firms or entities or individuals or operations, whatever you're bringing together, more value is created than would otherwise be created by them exercising effort or activities independently. You might have heard the phrase that the whole is greater than the sum of its parts. Well, synergy epitomizes that phrase. Now, there are common types of business synergies. So oftentimes synergies result from cost savings. That is, when two organizations combine either through a merger, acquisition, joint venture, or other type of common coordinated activity, it reduces the cost to both firms. Thus, more value can be created with fewer or less resources. So again, in that scenario, you have synergy. Revenue scaling. Oftentimes two firms come together, perhaps one firm has a product, the other has distribution channels, then you can actually sell more of a product, which scales revenue. This is independent of cost because oftentimes the cost may not change, but you have expanded your total sales numbers by virtue of entering into this relationship with the other company. So you have scaled up your revenue. Financial synergies result from the combination of either cost and revenue or some other performance metric related to financial performance. The first thing we generally look at is profits, but we may be able to look at other financial metrics as well, such as impacting given industries or sections, distribution of financial resources more equitably throughout operations or efforts. So there can be financial synergies there that are above and beyond, or the combination of cost and revenue synergies. And then lastly, operational synergies. That is, it makes it more efficient in operations. Maybe it's a convenience factor, maybe it's a quality of efforts factor based upon the possession of certain resources or the location or things of that nature. So ultimately, when we say synergy, we are looking at some form of output. So if you ever have a scenario where two organizations, two firms, two entities, two operational activities are combined together and it produces greater value, then you have some form of synergy there, or it may be some combination of various types of synergy.